What's up, everybody? Keith here again. I got the guys from the group in here. I'm going to go over how to dollar cost average or buy and sell on the way up and on the way down to help reduce your risk and help increase your reward while you're buying and selling. Bro, buy TNT. That is not a joke. Oh, gosh. It's an inside joke for everybody. Tommy Pickles for president, right, from the Rugrats. I got a Rugrats shirt on. So, all right. So, essentially, what we're going to go over is how to do this. So, let's be hypothetical for a second and say that you've made up your mind that you want to buy Ethereum, and I got the Ethereum USD tether chart pulled up here for everybody. But you've made up your mind that you want this Ethereum, and you're going to hold it for however long it takes to make your money. You don't care if it's a month or 6 years. You're waiting to the top. You want all your money. And you don't know exactly when that top's going to be. So let's say you've advanced along and you've watched the other videos in the stream and you've went through. You've come up with a plan that you're going to find this spot and you're going to go for it. All right, well, I'm going to show you how we do that here on the stream. So you can go back and watch this later. So the first thing I do is I draw a couple resistance lines on every chart that I do, no matter what. And before that, I always check to make sure I'm in log mode down here. Bottom right corner, you have auto or log. If you're not in log mode, you're in linear mode. And here's the difference. Okay? If I draw a trend line on this real quick, from this point to this point, and I put it back in log mode, suddenly stuff looks really weird. Okay? I always use log mode because log mode charts trends. And the trend is the number one thing that we're looking for when we're charting. We want to find a trend and we want to ride it. And when the trend's over, we want to know when to get out. And when we get out, we want to have our profits in our hand. All right, so the first thing I'm going to do is draw a couple resistance lines here. I don't have any indicators on the chart right now. I got them all erased and put up so you can't see them. First things first, resistance line. So I see one right here at the top where both candles stalled out. I'm going to do a lighter color here so the chart doesn't look so damn messy. Let's do light blue. How about that? I see a bunch of candles right here bunching up. These are monthly candles, so if you were to look at this on a daily or a weekly, you'd see even more candles balled up there. I tend to start my resistance lines on the left side of the screen. And when we're going to read charts, we're reading from the left to the right, okay? We're not starting at the price and then deciding. That's not how charts work. We start at the left and we work to the right. And this tells us what's already happened and gives us a better view of what's about to happen. If you start the price, you're making a mistake. Simple as that. We don't care about the price. What we want is percent gains. Okay? We want percentage gains. The hell with what it costs. The hell with what it's going to be. We want the percentage gains. I don't care whether it's going to be $10 or $40 million. What kind of percentages are you making in that time? Okay? Right here I had another one. Two candles stalled at the same spot. Right here I had some more candles stall there. Looks like a good line to me. You know what? I'm not going to draw anymore because if you look here, I didn't even look at the price yet, but if you look here, I drew this line based on this, and we scroll over here, and we've actually hit our candle set right here where we're actually making our price at. So I'm not going to draw any more lines. I'll stop there. After I draw resistance lines, the next step that I do is I'll put a Fibonacci retracement set on it because I want to see if the downtrend is actually over. Okay, we have a couple of key points we hit on our Fibonacci trends that we look for constantly. Now, if you'd like at this point, you can try drawing some trend lines with the trend line tool here. And you know, if you've got some trend lines, like we'll start at the top here and pull down. You know, it kind of looks like we broke trends a while back on Ethereum, and it's been doing its own thing for a while now. So we hit a couple candles here. Maybe we should move this down here It's kind of tough on Ethereum. The trend is really odd looking. But there's one there. We don't even need to do that right now. We could. If that's the way you like to chart, I'm cool with that because trend lines do work. But I want to start with retracement. We had this obvious downtrend. We had this ugly, nasty dip right here, and it tried to recover, but it couldn't, and it did another dip. Luckily, we found support down here at the bottom. I'll draw that line in a second. But we start at the top, and we want to measure this downtrend to see if it's over. So we pull from the top down to the farthest wick we can find. Now, I say the farthest wick we can find. Sometimes I don't like those wicks to be so far down. If it's a really odd chart, this is why I use the tether charts. The tether charts give me a better understanding for whether or not these wicks count, because it's US dollar tether. The charts are less bouncy a lot of times, and the wicks are smaller, and it gives me a more narrow field of view to more accurately dial in what I'm doing. All right, so we've pulled a retracement set. Let's just hypothetically say we were looking for this thing to break the 50 retracement line. It did break the 50 retracement line right here. Okay? That line's broken. So we've bought. We're in it. Let's draw a line to show that we've bought it. Right here. Bam. Make it green for money. Bought it. We can even label it. Bought to the top. All right. Simple as that. Now, you're looking at the internet and everybody's pumping your head up saying this thing's going to go $1 million and yada, yada, yada. But the fib retracement set that you have pulled up already shows you that there's some stopping points in here. Not only this, but the guys in our group are telling you, hey, it looks like this thing's going to stop here. This thing might take 6 months to get up to this point. Well, that pisses you off. Like, man, I don't want to wait that long. That seems ridiculous. Why would I want to wait that long? I could be taking my money out and moving it somewhere else, waiting on this coin to do something, and then I can get back in Ethereum when it actually starts doing something, right? Well, let me explain why we do that. And that's dollar cost averaging. All right, so you've made a little bit of money here. You're doing pretty well. But you're starting to think, man, I don't know how long I want to sit in this. So what we would do is we'd find our target. Now, a lot of times we look for our targets on a breakout. We've already been hypothetical here and said we had a breakout, okay? Our targets are up here, the 1618 and the 1414 lines. Since those are our targets, we're looking to get there in the end. If it takes 6 years, you waited too long. So how can we reduce our risk and reduce our capital being tied up forever waiting and still make good profits? Okay, how can we do that? Well, we'll start to reduce our position along the way. So we look at our measuring tool right here. I just grabbed measure. I'm going to start at the candle where we're currently at, and I'm going to measure all the way to the top. Okay, if I measure all the way to the top, that is 1,780%. That's pretty good, right? That's a great return. What if I told you it takes 6 years to get that money? You'd be upset. You wouldn't want to wait 6 years. The internet told you 3 days. Internet's never right, but it told you 3 days. Okay, so what do you do? Well, this is where dollar cost averaging really comes in handy. Okay, so let's be hypothetical and say you put in $1,000 at this green line here. $1,000 buy. Okay? Excuse me, I still got a chest cold. $1,000 buy. You're watching this thing go. Price is doing pretty well, It's came up and it's hit the 786 line. Right? You're like, hey, not too bad. I'm making good money here. I've got already a 70% profit. So I had $1,000. We do 70% of that. That's $700. Now you've got $1,700. So you start thinking, what if this chart falls? Well, shit. What if this chart falls? What do I do? Oftentimes we know that the 786 is a line that the chart stops at to take a breather figured out what it wants to do. If it goes over it, it tends to come back and check on it first before it continues to go. If you don't understand what I'm talking about, there's another video where we do fib retracement where I teach all about this, okay? There's a reason the group's called the 786 Assassins, all right? Because the 786 line is extremely important. Second most important line, as a matter of fact. Some will argue the third, and that's fine. I get it. The 50, in my opinion, is the most important line because that's our continuation line. We've already broken it. We bought it there. It doesn't matter. So we've got this 70%, and we decide, I'm staying in. I'm staying in. I don't want to wait. I'm staying in. Next couple candles, what happens? This thing starts to come down. It comes down, as a matter of fact, 26%. You had 1,700. 20% of that is what? It would be about 850. Quarter of that would be, $415. So you've lost $415 because you were stubborn. Okay? Lesson learned, right? No big deal. So you waited a while. This thing came down. That's fine. You've already made up your mind now. If it goes back up here and hits the 786 line, you're going to take some money out. You're going to take some profits right here. So what you've just done was you just decided that you were going to dollar cost average your way out. You've just decided that instead of leaving my $1,700 in there to marinate forever, I'm going to take some of those profits out. The thing is, you know that you're going up. Hypothetically, you know that you're going up. You just don't want to wait forever. You want to take some of that capital and move it into some of the other 3,000 coins that have a high yield. All right, so you reduce your position, you dollar cost average out of your position. So at about this point, you decide that you're going to take 20% take profits. You reduced your position by 20% right here. You do the math, 20% of 1,700, whatever, I don't care. But you reduced your position and took some profits and you moved them over into whatever you wanted to do. Maybe you wanted to store some XRP. Maybe you wanted to have some Bitcoin, some sats on the side so you can swap into some other coins and you just wanted to stack some. Okay, brilliant. You just did it. You just turned some money into profits and you took it. So now you can't lose that unless you do the same thing again and goes down. Right? You could even move it into USD Tether if you wanted. Either way, you've removed your position down some. Now you still have 80% of your original investment in there, plus there's some profits in there, right? You had 1,700 and you only pulled out 415. So now you got about, $1,300, $1,280 or so. I'm not a mathematician, so whatever. Either way, you're still making money, right? So the chart continues to do its job. We hit the 786 line. We have a resistance line here, 50%. You made another 50% on top of that. So you had 1,200, another 15% would be 1,800. Right here you are again. You know what I mean? You knew there was a resistance line there. You knew it. So this time you wise up. Okay? This time you wise up. You say, not falling for that shit again. This candle right here, when it comes up to here, I am selling. I've already made up my mind. I know what I'm doing now. I'm taking another 20%, right? I did it the first time. I got 1,800 in here again. I'm taking another 20%. 20% profits. That's 2 minus percent profits for everybody who was looking right there. Because I'm also not an English major. All right. So you took your 2%, you took your 20% profits again. Here you are. You're back down to $1,200 again. But you're still making money. Now you've got $800 some on the side that you've made profits that you've moved over into other assets or Tether. I don't care. But now you've moved some more money over there. Now you're stacking chips on the side. And you're doing pretty damn well. It feels pretty good. Problem. This thing doesn't stop here at this resistance line. It just goes all the way up here to the 1 line. Ah, shit. I missed out on some profits, didn't I? You didn't miss out on too much. No big deal, EJ. I'm explaining dollar cost averaging. You can just hang with it and you'll see some more here. You'll pick it up real quick. I removed some of my position at that blue line there at 11.21. I just lost some profits, didn't I? No, incorrect, I didn't. I reduced some profits. I also, at the same time, reduced my risk by another 20%, okay? I reduced my position by another 20%. I kept profits, and I've still got money in the trade, okay? This way, I'm still getting money in my pocket. I still got money in the trade. Life is good. I'm going to tell you guys, anybody who watches this video from now to the end of time, if you bitch and whine about profits, you don't deserve to be trading. If you make $100, hold your head high, because everybody else in the world has lost money. Okay? Since the beginning of time, people have lost money, and you made money. So don't complain. $1 profit is more than you had to start with. No ifs, ands, or buts about it. Don't whine about wasting your time. Time is precious. If that's the case, go back to your regular 9 to 5. Everybody else does the same thing, right? Okay, rant over. Now, you've seen it come up here and hit the one line. Let's drag this to the side just a little bit where I got some more space to work here. Let's get back into a zoom here so we can see a little better. All right, so it hits the one line. You knew the one line was there. This time, you're going to take some more profits, right? It's actually gone another, measuring tool here. It's actually gone another 30%. It's gone another 30%. Now, if you take 20% this time, you're actually removing a lot of your position, right? You only made 30%, and now you're taking 20 of that back out. Okay, your position's getting smaller. So maybe you don't take 20 this time. Maybe you just take 10%. Okay, let's do that, 10%. At this line, I hit 10%. 10% profits. I explained this in the futures video, kinda. But it's even more crucial there. When you're doing good on a futures trade and the percentages are flying up really high, man, you better know you better get out. Some of you guys have learned that. Frank just said it best. $1 is a win because anything less is a kick straight in the dick. And if you've ever been kicked in the dick, it doesn't feel good. So don't. All right, so you've hit this line. This price jogged around here for a little bit. Didn't really do much. It floated and did its thing, and it thought about it. And it moved up, and it thought about it. Okay, no big deal. You waited. You still had your money in. You're not whining because you've got almost $1,000 on the side now, and you've still got your original investment in there, plus some extra that you've left to try to ride on up. Okay. Now we get over the one line. Things are starting to look up. Let's just draw a little dip here, right there. Things are starting to look up, and we're heading on up here, right? Are we going to go that far at first? No, probably not. There'll probably be some stopping points in here. Just the thing having some price action doing its thing. So when you got to this one line and you had these targets up top, before it ever happened, you went ahead and measured, and you saw that to the 1414 was 230%. So if it goes from this line to this line, that's an extra 230% in your pocket, okay? Mathematically, you were smart enough to know, hey, when this thing gets halfway up this 230%, which would be 115, I'm taking some more profits. At $115, I'm taking some 115%. I'm going to take some profit. You drew a line right here, and when this line got hit, and you took your little box, I draw boxes for a reason. These are my boxes that remove emotion, okay? When I see this box get hit, no more talking about it, I'm getting out. Or if I see the box get hit on the down run, I'm buying. No more talking about it. It's just happening, okay? So the candle comes to here and stops. You went from this line to this line. Well, this says 83%, but I'm going to move it up to 115. right here. Whatever, 100%, close enough. We'll use that. I don't care. So you had roughly $1,200 in there. You've doubled it to $2,400. You take the thought process in your mind to get 50% of this out. 50% profits. You doubled your money. You had 12, you're up to $2,400. I'll get to it in a minute, Jeremy. You had $2,400. You took half of it right off the top. Now you have beforehand over $1,000 on the side. Now you're going to take 50% more of these profits and move them over. That'd be $1,200. Now you've got $2,200 plus on the side, and your original investment is still in. You're doing great. Next, the line finally comes on up. The arrow finally comes on up. I'll put this over here. Comes up to this 1414 and hits it. That was a 65% gain. Okay, again, we can do that math. Same situation. You've done 20, 20, 10 because it was a little bit smaller. This was a big move. You did 50. This was another medium move. You did another percentage take. Okay, so we're getting close to our big targets up here. We're hitting our box now, right? We're hitting our profit box. We don't have a guarantee. There's no guarantee that this thing is going to go to 1618. Sometimes it stops here at 1414. Okay, so now we have a dilemma. What exactly do we take? We only made 60%. Do we take it all out and stop and not be greedy? That's a definite option, okay? You could do a couple things here. You can get out. Don't be greedy. Let's say number 1, colon. Okay, or you can continue to do what you're doing. You can dollar cost average out some more. 2. And then lastly, you know, you've been pretty conservative this whole way up by taking portions of your profits on the way up. You could just say, number 3, roll dice to top target. It's up to you. You can decide what you want, okay? We have 3 options for when you finally get to your target. So, you know, you look at it and you say, nope, I'm going to let it ride. I'm good to go. I'm fine. I'm gonna keep eating on this thing. And you actually do well. And this thing goes from here up to 1414, doesn't dip too much, and then gives you another amount of percentage from 1414 to 1618, another 78%. You hit your 1618 line, you're out. You just took all your money out right there. You got 1200 here. Oh no, let's see, 1200 here, another 200%. That's $3,600. You took your $3,600 profit, you moved it over to the side. You've got $5,800 on the side now. You turned $1,000 into $5,800, and on the way up, you reduced your risk every single time. No matter what, on the way up, you had profits on the side that you never had to worry about, okay? This is dollar cost averaging on the way up. Not that complicated, right, everybody? I don't think it's that complicated. You can do this on every single chart and on demand. Dollar cost average your way out. Don't be stupid, be smart. I just accidentally changed the chart. There we go. Now, I want to go over dollar cost averaging on the way down. I'm going to do this on the daily Understand that this is harder, okay? There are some of us in the world that can afford to do this. Then there's people like me. And I'm going to rant a little bit here. There's people like me who don't have the money to dollar cost average. Essentially, dollar cost averaging is trying to make up for your losses on the way down by adding to a position, okay? Or reducing your position on the way down to stop your losses. Okay, so where do we want to start at on this chart? I guess we can do, yeah, we'll do this section right here. Okay, this is good enough because it's nice and continuing trend right here. You're seeing this opportunity to buy here. You see this dip right here, and you measure it out on your fibs, and you pull it, and it goes straight into the shitter, and it goes all the way down to 1618 perfectly, right? Perfect dip. Perfect dip. And from that dip, what do? You see it, and you know this thing usually goes to 1618 because it's a legacy coin. You go ahead and you buy that. You buy that because you think that's the floor, okay? You think that's the floor. You're good. You buy $1,000 worth. Done. $1,000 in your pocket. Let's erase the fibs because it did a perfect fib set for us. And again, we're only going to be in this section right here. I'm going to change this so we can see it a little better, just so we're only focusing on this section right here, okay? This is the section we're looking at. We saw the dip. It was nasty. We bought. Hey, man, we're killing it. We start off the bat, right off the bat with a couple candles. We're immediately up 19% to this point. Let me even make it a little better so you can see it better. Right up to this point right here, we're 19%, okay? 190 bucks. 190 bucks in our pocket. But what happened? The chart reversed on us, okay? When the chart reversed on us, we didn't know what to do. We were hanging out waiting on this thing to go to the moon, right? We were set. Well, what happened? It did another perfect 1618 retracement. Matter of fact, reversal, I'm sorry. It couldn't hold the 50 line. It couldn't hold the 786. It went right through them all the way down to 1618. When you saw this happen, you know, you had taken that $5,600 that you had on the side, and you only put 1,000 in this, right? Okay, so you took that 1,000 and it dipped hard on you, and you started losing money right here. You lost approximately 11%. You were up 19, and then you lost 11. Okay, so you really only lost 11. So you're down 110 bucks. So what do? Well, you didn't like the fact that this thing dipped like it did, but you were watching the fibs. You watched it. You saw it do a 1618. So what did you do? You bought here again. You added another $200. Because you lost 100 and something, you figured I add another 200. Whatever. I got 5,600 on the side. I made 5.5 racks on that last trade. I'm good. I got some money to blow now. I can afford to take a little bit more risk. I can dollar cost average if it dips. Okay? I can add more in. And this, what this does is lowers my overall buy. My first buy was 131. My second buy was less, but it was 116. So that 131 is going to come down some, okay? Come down some to more like 125, 126. And that'll be your new break even. Okay? Because 131 was your break even point. Now that you've added some to it, your break even point comes down some. All right? You've reduced that break even point to, you know, better. Now, you could have added more, but you didn't want to take the risk. The thing went wrong on you, and you didn't like that. So you just added a little bit. Well, the positive news is, man, this chart took off for you. You know what I mean? Yeet. It went great. It did better than you could have ever expected. You know what I mean? This thing was a rocket ship. It's great. It's magical. You rode this up, And it was doing so well that you just decided, I refuse. I refuse to take any profits. I think it's going farther. You're Keith in February. You think this thing's going farther. You made $148, 148%. That was 148. You had $1,200 in. Okay, so you got $2,600 and some change. Okay. Well, what happened? The chart went bad on you right here. Okay, it turned negative on you. You still think it's going to go up, but the chart turned negative on you, and it got ugly. Okay, you saw this dip and you went, shit. I wonder how far it's going to go. If you had drawn some resistance lines, you would have knew it hit support. We'll just draw one in here to show you. Okay. It actually blew through support. Not good. But you saw it. Okay, so you saw it go through the support, and you said, shit. You know, I had $2,600 and I've lost some. How much did you lose? Well, you lost a quarter of that. Okay, not good. Not good. You lost $425. What's the fib on which top, Darth? Keep going. I'm gonna keep asking me. I'll get to you in a second. You lost 25%. You just lost $250, and you know you lost $250. And you're like, shit. I don't want to lose any more money. So what do? You reduce some of your position right here. When you hit this spot right here. All right, I'll get to it. Let's see. Right here, I'm going to do red boxes for I didn't click on this. There we go. Red boxes for reducing position to make it easier for everyone. Okay. You came down here, you saw this happen, you lost some money, so you decided right off the bat, bro, I'm not losing a bunch of money. That's out. I just made another lick. I'm not losing it. So you say, I'm going to sell 30% for profits. You lost $250. You sold 30% of that. You know, you got $2,100. You got basically $700 in your pocket now. You still got $1,400 in here. And what happens? The chart starts to rebound. And you see it rebounding and you go, oh shit. I see it rebounding and I think I might be making my money back. So you pull the fib on it. And you want to measure this thing to see if it's going to break. And you've already made up your mind, like on the last trade, that if it breaks the 50 line, oh man, you're going to put more money in it because you know when it breaks the 50 line, it's going. That's the way you're doing charts, and that's your strategy. Well, what happened? We didn't break the 50 line, did we? I did not look at Ethereum before we did this. I don't own any Ethereum. But look at there. Without me even saying anything else, I'm just making random shit up here, a hypothetical. That's what happened. It didn't break the 50. It got stuck under it. So, you're the trader. You know, it's your money. So, you've been watching this thing like a hawk because you're making money and you're being super fucking careful. You know what I mean? You made 16% of your money back. You had lost 25. Now you've made 16. You see this thing not break the 50. You see it hit it and get rejected. And you go, that freaks me out a little bit. All right. So right off the bat, you start thinking maybe I should get some of my money out. And you do. You take another 20% profits. Do you mean the fib going up, Darth, or the fib coming back down? So, you saw this, and you were right. You took 20% of your profits, and immediately, poof, this thing started dropping. But the problem is, holy shit, I still got money in there. You had another... Okay, I'll get in a second. You saw this and you went, shit. There was a support line over here somewhere. It's hitting the support line. God, what am I going to do? I'm losing money again. As a matter of fact, I lost another 20%. I just made 16. Good thing I took that money out, huh? So now I'm really only down 4% overall. So what do? Well, you've seen this thing hit support. You had your lines marked. You knew what you wanted to do. Right here, you're getting spooked now because the chart's done dumped on you a couple times. And you're getting worried. So you say, no, I'm not. You're not getting my money, homie. I'm going to sell 50% for profits. So 16% after $1,200. Okay, that's $120 or so. No, $145, $150, $160. You had $260. Okay, you lost 20% of that. You lost basically $240. So you're right around, your normal $1,200 again. You took half of it, so you only got $600 left in this trade. I'm being hypothetical. And then what happens? Man, this thing goes full Dumpy Dumperson. Full Dumpy Dumperson. And you lose 50% of your overall investment that you had left in there. You had $600. You just lost 50%. Okay? You lost $300. Instead of losing $1,200 minus 50%, you lost $600 minus 50%. You reduced your risk in half. When you reduced your risk in half like that, you mitigated your risk. You dollar cost averaged out so that you reduced your risk, but you still had a chance to make some money. Now, did you lose a little bit? Yes, you lost half of what you had in there, which was $600. You lost half, you lost $300. And that sucked and it hurt. The good news is you pulled profits out along the way. Every trade cannot be successful, okay? That's just the way it is. I know we all want to hit home runs, and we all want to make 1,000,000%. We all want to be millionaires overnight. I'm sorry, it's just not the way it works, okay? It's just not the way it works. So I'm going to encourage you to dollar cost average on the way out and the dollar cost average on the way in. If you can afford to buy more in when it's dipping, that's on you. Do it if you'd like. Guys with deeper pockets that we used to be friends with would continuously buy and buy and buy. You've got a lot of people watching you buy. Well, all these other people don't have as much money as you. They can't afford to keep buying in when it dips. Because we always say buy the dip, right? Well, what if you just can't afford to do that? Well, you're kind of screwed, okay? So you better be dollar cost averaging in and out to get profits so that you can afford to buy dips if you want to buy dips, okay? Hypothetically speaking, let's say you didn't reduce positions right here. This shit's dipping and you keep adding in and adding in and adding in. You looked really foolish, wouldn't you? Well, I got news for you. A whole lot of people kept buying on this downtrend. It's a very ugly, very nasty, ugly chart. And I'm going to tell you right now, I know the people who kept buying in, okay? They do it. I want you guys to watch these videos, whoever you are, from now for 20 years. Watch it and know that I've seen it happen with my own eyes. People dumping money into a chart that was going down. I did it for a while, okay? I'm telling you not to make the same mistake. Just like in the futures video when I told you, I'm warning, do not keep any money in here you don't want to lose. I'm warning you, pay attention to what I'm saying. Don't lose this money. It's yours. Don't over leverage yourself. Don't be stupid. I'm telling you that again right now. This is an easy way to take profits and make good money. You might not make the grand slam that you want, but you can't really bitch about hitting doubles all game. Okay, and I give the baseball analogy all the time. If you hit 300 in baseball, you're a good hitter. If you hit 400, you're the greatest of all time. That's 40%. In this trading system that we have, we're about 70 to 75% positive. If you hit that in baseball, you'd be the greatest baseball player that ever lived. No question about it. All right, so take your 75% and be happy about it. Other than that, that's the video for dollar cost averaging. It's not as complicated as it seems. Be smart. Pay attention. Anybody needs anything, feel free to message us. There's some merch down in there if anybody wants to buy a shirt. Any money that I get from the shirts, I'm going to give away to the group. I don't take anybody's money. I don't want your money. I just want you to be rich with me. And if we can all be rich together, we can all be friends together later and hang out in our mansions and shit with our Lambos. Doesn't that sound fun? I think it sounds fun. All right. Till next video, y'all be good. Peace.